So with that, I'd like to first begin the session with the management of Laxmi India Finance. So I'm pleased to welcome you all. So from the management team, we have Mr. Deepak Baid, he's the Managing Director, Mr. Gopal Sen, the Chief Financial Officer, Mr. Piyush Somani, Chief Treasury Officer, and Mr. Kuldeep Singh, he's the Chief Business Officer. So Deepak sir, we'd love for you, to take us through the company's journey, what has been the journey so far for Laxmi India Finance, the key growth levers you are focused on going forward, how the business performed in Q1, and what are your views and how you thinking about the road ahead. So over to you, sir.
Yeah, thanks, Rajat, and welcome all the audience, and thank you for giving us an opportunity to tell us about the company and tell us about how we have built up this company. So, a little bit first, I want to tell about the background. So, this Laxmi India Finance Limited is based out of a Jaipur NBFC. We are into secured lending side. So, we have 196 branches across 6 states, that is Rajasthan, Gujarat, Madhya Pradesh, Chhattisgarh, Uttar Pradesh, and Maharashtra. And we are footprints in rural and urban areas with almost 2,000 employees across the 6 states. So, if I talk background about the company, so my dad has started this business in 1991, and he has started with a wheels business first. At that time, it was a proprietorship firm we started. So, this was going very well, and we are well established in the Rajasthan market. Then, unfortunately, we lost him in 2000, and then 2000 I joined the company. I was just studying in 11th standard, but I accepted this challenge. So I made my routine from morning to afternoon school, afternoon to evening office, and late evening tuitions. So, but this is the main bread and butter of the family. So I thought to expand this business to next level. So we started opening the branches in a different areas of Rajasthan, and then we have joined hands with other NBFCs and bank also for business opportunity for other segment like new vehicle. So like, we have joined hands with the HDFC Bank as a channel partner for Rajasthan under AU. And then we have joined hands with the mass finance also. So strategy what we made is all the refinance we were doing on our own book, and the new vehicles we were putting in a HDFC Bank and a mass finance as a co-partner co-lending business. So this went very well, and after that in 2010 we come up with this. We thought to get our own NBFC and work in our own NBFC and building up our own book. So we plan to open bought this company called Laxmi India Finance Private Limited, and starting with in 2011 we started with a new name, new brand, and new operation started with this. Slowly, gradually, when we have spreading across Rajasthan, we have found that only the wheels making other businesses loans are also required, and it's in demand. So we thought we can start giving the loans to SME customers also against the collateral and for the extension of their business. So this went very well, and we start building up a good book in this SME segment also, where this is 100% secured with a LTV of 45 to 50%, and generally these properties are residential or commercial. So then we have well settled in Rajasthan, so we thought let's have a footprint out of Rajasthan geography also. So we started opening the branch in 2019. 2018 we started our operation in 2019 we started in Gujarat, then 20 we started with MP, then 21 Chhattisgarh, then in 25 we opened in Uttar Pradesh also, and 26 recently we opened with Maharashtra also. So we are basically we have a customer base in the rural areas, where especially we have a customer target audience are like semi-urban, urban, a customer base who have a very who are into NIP customers, non-income proof customers. So where these customers don't have any documents, but they have a good business turnover, good transactions, and on the basis of that, we sanction them the loan. So basically, priority for me, which I have kept from day one is a focus area for me is a team building. What we have done it from day one. So we have a very strong team today with 2,000 manpower, and especially if you're going to see the KMPs and SMPs, so they are with the company from more than 4 years, 5 years, and in fact 6, 7 years also. So that trust what we have built up with our team. Second focus area is business. So we have main focus area or main concern business is for our secured business, which we have seen that never this has given a dent. Either you take a time of COVID or GST or any other demonetization, but secured business was the best business what we have seen and given the best return. So that was the main business segment what we have started, and almost today 80% consists of, or 80 to around percent consists of our SME and MSME loan. Then third is especially we want to drive across Bharat. So want to have footprint. So we have a good scope, and being this size of company and big we have a good scope to gain our business growth in rural and urban areas in the other states also.
Sorry to interrupt you in between, but there's some voice quality issue that a few of the participants are saying. So can you just move the speaker closer to you if that would be helpful, sir?
Okay, so let me come in front then. Just give me 1 second.
Yeah, it was clear to me, but I think some of them are reporting that there's some audio issue. Yeah. Thank you. That would be helpful, sir.
Yeah. I'm audible or better now?
Yeah, better for me. Let me just check it. Yeah, now you can hear clearly. Yeah.
Yeah. So as I was telling, the main focus area for us is to having a good team built, and where we have built a good team members who have a good vintage with the company, especially the seniors, KMPs, SMPs, and more than 4 years, 5 years, 6 years they are with us. And then second area is focusing on the product, where we have a totally maximum eco. I don't know how. Rajat, I'm audible, right?
Yeah, for me it's audible. I don't know some of the people. So can you do one thing? Just if you can just reconnect, that would be helpful. If you can just reconnect.
Sure.
Just once, if you can reconnect, that would be helpful. Apologies, everyone. Yeah, we'll just start in another 2 minutes. Yeah, sir, if you can try now.
Yeah. So, Rajat, I am audible now?
Nearly to audible you, sir.
Achha.
Let's wait. Yeah.
Okay, so.
Okay, you can continue, sir. Yeah.
Okay. So again, if I'm coming on main focus area for us is like first is to building a good team members, so which we have built. So we have now 2,000 plus employees across all states. And in fact, if you're going to see SMPs and KMPs, so they are almost more than 3 years, 4 years with the company. So that is what we have built up. Second is our focus area is to have a strong business product. where we have seen that the secured lending is our main product, which consists of almost more than 80% today. So we have always seen that secured product, and especially the security is appreciable. So there, that business is not challengeable and always in a growth side. So that business we have created in this area of where we are operating. So that is our focus area. Second is the third point is that footprints what we have created in across these 6 states, and still we have a good opportunity in to ourselves to establish like UP and Maharashtra, which we have recently opened. So this can take us to very next level, and this will improve our cost also, and this will improve our efficiency also. And credit underwriting is the most important part, and there we have no levy, no leverage or nothing that we have kept. So this is here we are using a lot of technology, where from lot of technology from day one till day end, like onboarding till organization gives a NOC to customer. Everything is monitored, or it is cross-check, or it is verified with different APIs and all. So there's a very strong underwriting process what we have kept. And collection, which is main forte, because पैसा बांटना आसान है, पैसा लाना बहुत मुश्किल है. So we have always kept ourselves very strong on very watch on the collection numbers, where we have especially focus on a collection and getting a collection on time, on date. So, and of course, one of the most important, and without that you can't grow, is a liability franchisee. So we have almost more than 50 banks, NBFCs, including banks and NBFCs today, who are keep on giving us funds. And if you want to see the rating, so we are A minus rated before, and recently our rating got upgrade, and our costs have come down, and in the coming years it will be coming more drastically more down. So these are the main scope area for us. Plus I want to highlight on our board of directors also. We have a very strong board, very strong committee members with us who are linked with this lending business, who are retired from like post like GM, from ED, or from director post from different banks or organizations. So we keep on getting the guidance from them. We keep on strategy meeting with them, and keep on getting good knowledge from them. So that is a very key drivers for us, who keep on helping us for further growth and giving us a good guidance. And last, I would say the governance side, so which is most important in any NBFC. So we are very we are very strong on the governance side. So we are very prompt on whatever new demand or comes to the market. So we keep ourselves strong there and follow the governance side very strongly. So this is little bit about the company and about me and myself and my past. About product, I would like to call Kuldeep, our Chief Business Officer, so he can tell about the product and little bit on that. Please, Kuldeep, over to you now.
Thank you, Digo sir. Good afternoon, everyone. So on the product side, we are continuing with the MSME, which is the biggest product and our focus area, MSME secured business, followed by the vehicle business, where we are doing the used vehicle, personal as well as the commercial vehicles. And small portion we are doing in tier and BL side also. And together with that, we have also recently started the wholesale lending. So we are funding to some NBFCs also, term loan product. But our main focus will be the MSME secured business, with our deeper presence of the branches in tier 2, tier 3 cities of the state, with the categories of the branches. So we have divided our branches into 3 categories, where tier 1, tier 2 and tier 3 are different set of branches. The complete digitalized process. So starting from the onboarding journey, starting from the lead creation application, then after the sanctioning part, which is happening on the mobile application only. Then after all the KYC, all the verification is also happening digitally. The only manual part is the signing of the agreement disbursement kit of the customer from the customer, which we are moving to the electronic method very soon. So the complete process of onboarding as well as the customer service is the digital journey. Our branch is actually the service provider, frontline service provider to the customer. So they are sourcing, the collection is also happening, service is also happening at the branches. And hub model, hubs are where the hubs is the helping to the branches in the disbursement to the customer. So economy of scale we are achieving in terms of hub and branch model, where vis-a-vis we are expanding in terms of the cluster. So 6 branches reports to 1 cluster. So it is easy to expand and to manage the branches productively. So whenever we want to expand into any new territory or any existing state, so we enter into the cluster method, which is very easy to manage 6 branches by 1 cluster. So another part which I can say the USP of Laxmi India Finance is we are the multi-product company. So we are offering the mortgage business to the customer, MSME secure business to the customer, as well as we are funding vehicle also to our existing customer. So whenever customer reaches to us, we can ask for either this customer is having a requirement of the MSME secure funding, or maybe a vehicle funding, or existing customer may be requirement of other products. So we can cater our customers in a better way, and by offering the different products. So this is all about from my side, and thank you. And now I will request Gopal Kishan to continue further.
Thank you, Gudevji, and good afternoon to all. I am Gopal Kishan, CFO of the company. I have been associated with the organization for last 4.5 years. I'm taking care accounts as a whole. So I would like to take 1 or 2 minutes to give you a brief overview of our Q1 performance. Our AUM increased by 27% on year-on-year basis and reached to 1,721 crore. On the same line, disbursement is showing increasing trend and increased by 38%, and in Q1, 230 crore we disbursed. We closed our operation with Q1 16 crore 43 lakh as a PAT, and reflecting 70% increase. With ratio side, 13.86% return of equity, ROTA is 3.45%, NIM is 11.36%, and GNP is 2.08%. With this, move to Piyush to add something in liability side. Thank you.
Thanks, Gopal. Hi, good evening, everyone. I'm Piyush Somani, heading the treasury vertical for the company. So the best part in Laxmi is that we are diversified in respect of getting up borrowings from the banks as well as NBFCs. Laxmi has tried various instruments of getting the funds, that is our raw material. As on date, I can say that the challenge is the cost of borrowing is one of the challenges that NBFC used to face. But seeing the scenarios, pre-IPO we were at place at 11.73 around. As of now, we are borrowing at incrementally 10.48%. That is, I can say that the best part that we have drawn since last 12 months in respect of the borrowings. Secondly, I can say that the liability franchise is based out of more bank-centric, lead-centered towards NBFCs in order to facilitate the cost of borrowing to be on declining side. I mean to say that around 80-82% of my entire borrowing for the year is being drawn from the banks and leased from the NBFCs. Thirdly, the various instruments we have tried and tested in the market. It is the listed NCDs that we have done so far in the past as well as the coming future also. We are doing some listed NCD transition. That is a structured transition one. Second, direct assignment transactions we have tried and tested 10 times so far. We have done with various banks and NBFCs so far. So I can say put together around 320 crores the amount, that's the gross amount that we have done so far in the direct assignment transactions. The direct assignment transactions is being done only to facilitate the ALM. Secondly, to benefit the, I can say, the liquidity as well. So we used to downsell our pool of having a residual tenure more than 4 years. Fourthly, I can say that not only we are drawing funds from NCDs or this direct assignment transactions, we are drawing funds from term loans as well. we have a working capital limit from various banks. So as of now, around 28 to 29 banks are there. Rest are NBFCs. So put together 50 to 53 lenders are there. So thanks from my side. So over to Rajat.
Yeah, sir. Thank you. Thank you so much for your time and this introduction. So we'll begin the Q&A. If anyone has any queries, he or she may raise his hand or probably send his questions in the chat box. So I'll just wait for a couple of minutes.
Sure.
But before that, sir, I already have a question. So this is regarding the asset quality on the up money issue. So one of the participants is asking what's the update around the up money issue currently. So if you can just give it a brief.
Yeah. So up money we have almost 19 crores book what we had of up money, and we are working on it on a resolution. We are in touch with him, and we are discussing with him for a resolution. But and we have also put in a court also, and we are accepting in our favor. So once we get the report in our favor, so we will be able to collect money more faster from customer and from him directly. And meanwhile, we have also made a provision of almost 70%, right? Almost 70% provision we have already made till last quarter, that is Q1 June, and 30% is remaining. And if the recovery which seems will not be happening, then we can have that we will be putting that money also under observation. So we are expecting, but yes, we are in touch. We have a group of people who are in touch with the local team, local people and local person, and putting trying best to get a recovery ASAP. But we are well 70% हमने फिर भी we have done a provision, so we are made the provision already.
So sir, but what was the gross NPA numbers with or without the this up money? So it was, I think, less than 1%, and it was some 2.13, if I'm not wrong, right?
With up money it is 2.08%, and without up money 8.3%, less than 1%.
0.83.
0.83.
Okay.
We are very healthy. If you want to see, we are healthy side. Our NPA is very well controlled. But yes, up money has created this mess. But otherwise, overall book is performing well.
Okay. Now, sir, the next question is in regards to the vehicle finance. Now, given that we don't have a significant portion in the vehicle finance, we are more in MSME. But the question comes in terms of the competition that we might be facing. So is there any competition from PSU or some small finance banks or some private banks in vehicle finance, especially in the geography that we are operating in? And given that all PSU are showing good numbers, that's what the question is.
So Rajat, yes, there is a competition between us and the other small finance banks and PSUs, but their criteria of funding, the PSU banks and small finance banks, criteria of funding is different. Actually, they are concentrating on the customers who are having multiple vehicles already, but we can fund to the customer who is having one vehicle existing. Also, they are not focusing on the used vehicle actually, but we are focusing completely on the used vehicle. So the competition is actually mitigating somewhat. Also, our presence is more deeper as compared to the PSU banks and small finance banks. So comparatively to this to PSU banks, we are more tier 2, tier 3 cities. In fact, tehsil places and small towns are also covered by us, not by the PSU banks. Also, small finance banks are mostly covered there, the district places, not to the rural places, tehsil and small towns or medium kind of towns. But we are present everywhere. So you can assume in Rajasthan we are present currently at 94 places. So by deeper presence we are mitigating that competition. Secondly, we are more focused on the service part. So we are going to the customer place. We are giving the doorstep service, where the banks, PSU banks and small finance banks are not giving that much service to the customer. So that is customer first approach. So we are going to the customer, we are delivering a doorstep. Whether in PS banks, they are not going to the customer, they are depending on the dealers, they are depending on the brokers. So that is the difference. So we having I can proudly say we have an edge over the PSU banks and the small finance banks.
So, okay.
Yeah, I want to add one thing. So, being presence, having a direct branch office in a rural and urban areas especially, so that gives a big comfort to our customers. Where these banks and other or big NBFCs doesn't have that much reach to customers. So that is a very positive for us that we are having a good branch numbers and directly reporting to reaching to them. Second is the TAT what we are maintaining is a very important. In wheels, generally people don't wait. They want a very fast service. So our TAT of disbursing in wheels is almost 24 to 48 hours. So within 24 to 48 hours, we can easily disburse used wheels that other, if you compare with other banks or NBFCs. So they are not able to maintain this TAT. So that is a very positive part for NBFC for Laxmi.
Okay. Okay. Next one is on the growth side, sir. So now, given that we have a small base of 1,600, 1,700 crores, and in Q1 we grew somewhere around 28%. So our target, medium-term target is somewhere around 30% of CAGR growth in terms of AUM. So do you think we can go ahead with this 30%, or probably there's a scope for more while maintaining the underwriting discipline?
So yes, sir, we have given a 28% growth. So that is also very good numbers because Q1 is a little bit slow, but still we have achieved 28%. But if you go to see, as we have recently opened the new branches across different states, that is UP and Maharashtra. So now the productivity is going to start coming. Plus existing branches also getting mature. So we believe that now we have 196 branches. So that won't be a challenge in maintaining this 30% CAGR growth in the coming months, and year to year we can have a good growth. And being if you want to see, our size is small, so 1,700 odd book is small now, small. So getting a 30% it will be not difficult. So that is a very positive point. And still, if you want to see further in expansion side also, आगे अगर दूसरे states में भी हमारी presence अभी इतनी नहीं है, so we have a big chance of having a presence in other states also and delivering to such product to their customers also. So we think that in the coming couple of years there will be a big growth in Laxmi, and that can easily we can create it.
So sir, there is a follow-up question in regards to that as well. So in terms of the segments, I think it's obvious that MSME would grow, but in terms of vehicle finance, other tractor financing or consumer lending, so are they expected to drive the momentum? Probably it will be MSME, but what geographies and where do you see the majority of chunk of AUM growth? Is it MSME, and if you can explain a little bit on that?
So main growth will come in MSME because our major product is MSME. And if you want to see on the 6 states and 96 branches, we are doing wheels business in a limited branches. So you can say that in Rajasthan or some part of Gujarat and MP we are doing it, wheels business. Otherwise, our main core product is MSME, which we are doing across the state. So with this credit cost, I believe that won't be a challenge to maintain because of 2-3 things. Because that first of all, tech what we are using. Second is what we are taking from the customers, that the credit underwriting, especially what we are doing it is a very different and very secure side what we are taking a call. Third is that we are taking the complete family in the deal. So this is very different what we are doing. That other NBFCs in Laxmi, what we are doing is we are taking the complete family. Let's say father has 2 sons, their wife, mother. So we are taking everyone in a deal as a borrower, co-borrower. So and with the lady SPDCs. So that's a USP you can say for us. where customer intent of default gets very low. And last is that we are taking only the property which is security, which is self-consumed. Either it is a residential or a commercial. So he will not let go that property by any chance. So maintaining this credit cost and maintaining this SME platform will be not challenge for us. We will be able to achieve this target in a year-to-year basis.
I'm expecting it will be more than 30%, obviously, but yeah, let's see. Now, the next question is in terms of the yields. So we are lending at around 22 odd percent, credit cost 1%. So Prabal wants to understand the ticket sizes in MSME loans, the underwriting and collection process. What's our bounce rate typically? So if you can just give how the collections and underwriting mechanism work out there.
Sorry,
yeah. So ticket size, typically what we are doing currently is 6.5 lakh rupees in the MSME secured vertical. Yes, as sir has already explained about the underwriting process. So the typical underwriting process is happening on the mobile application with all the KYC verification, banking aggregator, and then CKYC and bureau. Everything we are doing, we are having the robust mechanism to get through the cases, filter out the cases. That's why the credit cost is around 1%. As compared to the yield we are maintaining the same. Yes, some of the percentage of the rate benefit which we are getting from the lenders, we will definitely pass on to the customers, which will increase our business also. So, and about the bounce rate, around 30% is the bounce rate as of now, and out of 30%, we are closing at around 93-94%. So, PAR 30 is around 7%, right, Piyush?
Yeah.
PAR 30 is around 7%. So, we are maintaining the healthy portfolio in terms of the underwriting as well as maintaining the same yield.
Okay, but sir, if you can also give the yields on the segmental yields of LAP and vehicle finance, that would be helpful, and the overall names as well in terms of segmental names, if you have that number.
So, this MSME secured business, we are getting 32.48% yield, and followed by the vehicle segment, which is 19.87. This is, I'm talking about the June closing. Followed by the vehicle, which is 19.87, and wholesale lending is around 16%. Personal loan and business loan is around 14 to 15%.
Okay. Now, Piyush sir, next question is for you. Even though I know it's mostly on the private banking side and PSB. So the question is the proportion of bank funding split versus private and PSBs. So you have recently onboarded ICICI, so just if you can give some light on that.
So basically, one is the cost proposition is to be worked since we are in a growing phase. So that's why we are more centered towards backing and getting a loan for a higher tenor. Since we used to give an onward lending, which is somewhere around 4 to 5 years. So that's why our weighted tenor for the borrowing stood to somewhere around 53. Reserve is because of the banks only, where the NBFC precisely used to fund us for 36 to 48 months. In order to address that portfolio and the cost proposition, we are more centered towards the banks and consolidating our limits as well with them.
Okay. So in the meanwhile, if anyone has a question, he or she may also raise his hand. But I'm taking the questions that are there in the chat box. So the next question is in terms of the expansion of product verticals. So now the news has also come that Aditya Birla Capital is going to foray into gold loans. They are also opening some 1,000 odd branches. Capri is doing well. They recently opened 2.5, 3 years back. Now the question is, are there any plans to expand into gold loans or unsecured top-up loans, or what are your plans in terms of entering new business verticals? And
so yes, we are also exploring some new products like the complete PL journey. We wanted to move to the digital method. So we are under the preparation, under the development of the application where the customer onboard himself without any human intervention. So there will be credit happening at application only. Then on the basis of the bank aggregator, on the basis of salary certificate, where the cross verification from banks will happen automatically, bureau will fetch automatically, and the obligations of the customer will also be fetched automatically, and the overall calculation will be completed on there and then after we will float the offer to the customer. So this will not be a small ticket size personal loan. This will not be the loans which are other applications are offering, like advance salary or other, where the small ticket size personal loans they are giving. We will be giving to the professionals who are having the continuity in terms of service and getting the salary, and the complete onboarding process will be happening digitally. So we are one is this is what we are thinking of. As well as in MSME secured lending, we are thinking, we have formalized, we have developed a product. Only the approval from the board is required, where we will be focusing to the subprime customers. Currently, our yield is around 21-22%, but in that product, we will be having the documented income from the customer, and then after so that will increase the quality of portfolio further, and simultaneously we will be maintaining the yield from the other products. So that will increase the portfolio of the organization. So these two products as of now we are thinking of, as well as there was some plan to expand into the supply chain financing, but we have holded that because of the recent notice from the RBI and recent development from the RBI, where the rolling credits they want to stop. So we have hold on that product. So we are also thinking on to other POP products. But yes, gold loan, we have the complete research on the gold loan. This will require some capital expenditure actually. So that's on hold, but definitely if we will be able to have that capacity to expand that capital expenditure, so then we will also move into that product.
Okay, so this was on the vertical side, but in terms of geography as well, so we have recently entered Maharashtra. So any other plans to expand? Yeah, how is it in terms of geographical expansion?
So currently we are present at 94 places at Rajasthan, only 24 places in Gujarat and 44 places in MP. Around 15 places we are present in UP, and only 6-7 places we are present in Maharashtra. So there is very good scope, very untouched potential available in MP, Gujarat, Maharashtra and UP. Chhattisgarh is actually a small state, so we don't want to expand much. So there will be around 15 to 20 branches only, and as of now we have around 10 branches. But MP, Gujarat, UP and Maharashtra, especially Maharashtra and UP, where we have recently started our operations. So there is huge untouched potential there. So we want to first tap that potential, then we'll think of to increase the state. But yes, we are having plans to move to other states also. We are only at 6 places in the map of Bharat, but there are other untouched states also. We will definitely be entering in near future.
Okay. Now the next one is on the co-lending side. So what's our view on co-lending and everything, sir?
So co-lending today, as on today, we are not having any arrangement or any co-lending agreement with any of our any best bankers on. But yes, we have a plan in future to have a co-lending business, because the reason is the BT out which we get. So those cases we can forward to bank, and those we can have a other income source from there. So that is a plan what is there in our mind, but right now we don't have any co-lending arrangement with any banks or small finance banks. And especially, Bobby, we have recently raised the capital, so we have enough capital, we have enough leverage is also not high. So this is almost 2% net is there. So we have a scope to grow in our own book on own book only. So we are planning to grow our own book right now. But yes, in future, as and when required, we will be
we can join hands with any banker and we can do this. We can add on this product.
Okay, sure. Now, the next question is from Manav. He's asking in terms of the branch level economics, regional wise. So I'm not sure whether you have this number, but if you can give the overall branch level economics and what % of the branches have actually tested across cycles. So whatever the NBFC has gone through, how many branches have seen the storm?
First I'll explain the branch model.
Yeah.
So typical branch is having 5 to 6 ROs, relationship officers, one disbursement officer, which is the operations guy, and one branch manager. So this is a typical structure where we have categorized our branches into 3 categories: Tier 1, Tier 2, and Tier 3. So Tier 1 is having 6 to 7 or 7 to 10 ROs, and Tier 2 is having 5 to 6 ROs, and Tier 3 is having 3 to 5 ROs. So this is the only difference. This is because of the potential of that particular place. Accordingly, we maintain the resource at the branch level. So we create the premise. So we find out the premise according to the category of the branches. 6 branches put together form a cluster. So we always enter into the circle formation where the cluster manager can move to one branch in the morning and can come back to the cluster location in the evening. So cluster location and branch location, the distance is around 100 to 200 kilometers, not more than that. So this is the cluster formation. Then 1 or 2 cluster will reports to the ASM. ASM will reports to the ZSM, and ZSM reports to the CBO. This is the complete hierarchy in terms of the branch model. As far as the branch economics is concerned, so typically branch will complete the break even in around 7 to 9 months, where the AUM is around 1.5 crores to 2 crores, which they easily achieve in 7 to 9 months. And the branch expenses, where the branch salary of the RO, salary of the branch manager, DO, branch rent and petty expenditure, which is happening regularly in the branch every month. So that expenditure is around 1.5 lakhs to 2 lakhs every month on an average. And that can be, the break even can be achieved in 7 to 9 months when the AUM will reach to around 1.5 crores to 2 crores. That is the economics of it.
So, sir, a follow-up question that there has come. So if you can give a breakup of employees in terms of sales, collection, and underwriting across the company.
So sales, we have around 900 people. Collection, around 200 odd people are in collection. Credit, we have around 60 people. And operations, we have around 150 people. So this is the
Rest back office and all.
Rest back office and all. So overall, we have more than 200 people as of now. 2,000.
So now the question, another one Prabal is asking on his initial follow-up question in terms of the credit cost. Which period has we seen the highest credit cost, and what was the number, and how are we able to curtail the NPAs below to about 1% despite the bounce rate being so high?
September, I believe. It was COVID
So I believe September again. So September was a thing where our collection got dipped. It came to somewhere around 89% overall. But afterwards, we have again picked up quarter to quarter. If exactly numbers, I don't remember. Yeah, but March, I remember we have closed at a 93 point some 20 number, 93.20. And currently also we are above 92%. So we are very much focused on collection and getting a good response from the customers.
So, okay, I think you have answered most of the questions. I don't see anything missing. There was one regarding the RBI drafts on NBFC lending, your view in terms of what impact considering the current product portfolio.
Which circular is talking? Can you?
Akhil, if you can give a brief. I'm not sure whether he's there on the call or not now. Yeah, he's there. So he's mentioned the revolving credit one.
So we are not, sorry, please. So as of now, none of our product is having the revolving credit facility. So this is not impacting our business as of now.
Okay. So I think most of the questions are well
Most
answered.
of the loans are like a term loans, where EMI based on a monthly basis. So there is no, this circular doesn't affect to us at all.
Okay. I think, yeah, he got his answer. Yeah, sure.
We have a complete our book is retail, and retail may be small ticket size. So very comfortable on a collection side also, distribution side also, and we are well diversified also. So if you go to see, major portion will be of Rajasthan, of course, because being the mother state. But yes, major, but other things if you go to see, we have now other states are also growing, and they are also coming up with the numbers. The disbursement month to month is increasing. So that's a best part, that we are able to maintain our portfolio with a quality and a small ticket size secured loan. So that will be a focus point, a focus area for us for the future also.
I missed one more as well. That's an interesting one. So what are the safeguards that you have implemented? So after the up money issue in terms of DA, so have you dialed down on the DA transactions, or you would carry it despite the issue?
See, the up money was really very sad with all of us, and we are still regretting on it. But still, we have confidence on us. We have a confidence on our team that we have a little bit, something was missed out from us. But of course, we have checkpoints. We have increased our checkpoints. We have increased our due diligence process, getting data on a monthly basis, quarterly basis, reviewing, and of course we have put a restriction on a ticket size also. So these all things which we have taken a call on DA, overall DA policies, what changes what we have made it. But yes, I believe up money also we are in talks, so hopefully we will resolve it, this matter.
So also I want to add something. Earlier this was actually a Punjab, and the reason was Punjab. Now after up money we have restricted to our geography only. So we will be taking the cases from our existing geography only, so that in any such incident we can easily collect the money. Also, we are getting the security in our custody. So whatever if there is a MSME secured lending, secured loans, we will be getting all the property papers and every document with us in our custody. So this is the particular thing which we have added in our due diligence as well as the security.
Okay, I think most of the questions are answered, sir. So if you have any closing comments, that would be helpful in terms of the growth and what do we see. So just 2-3 minutes. Yeah.
Yeah. So Rajat, I believe what growth plans what we have given. So I believe it is easy approachable with this 196 branches, plus we have planned to open some more branches in this year, 25 more branches we have.
35
branches we have a plan to open in this financial year, and we have a branch now existing branch who's maturing it. So जो numbers हमने दे रखे हैं, the numbers which.
Sorry, Deepa, if you can mute your line. Sorry, there's with the disturbance. I'll mute. Sorry.
Yeah. So numbers what we have given in our guidance, so we believe we can achieve the numbers. And why Laxmi is different, we can say a few things which I want to highlight is, of course, skin in the game of a promoter. So the promoter is having good holding in the company, and he's working day night with the company growth and all. So so this is a very positive that the promoter is involved in a business and taking care on a daily basis, and he's having a good amount also investment in a company. So he will be taking a conscious call. Second is diversified lenders. So we are very well diversified on a lender side, so which is very important. So nowadays if you go to see, so our new borrowings is coming from the banks, especially PSU banks and private banks. So that is very important for our further growth. And our book is also very much diversified. Of course, we have a product, one product is consists of 80%, but still that 80% is distributed across 6 states and into different areas of a state. So that is a very best part, I believe, and with a healthy LTV. So because that LTV is very important, so that customer don't get that property for you and he gives you as a gift, you can take it. So we don't want to go in that way. So that way we are very healthy. And of course, the team, as I told, is a very important place, very important. So we have a very well polished team where we are having. And if you want to see the margins and all, what we have, maintaining the ROTA, what we are maintaining is very healthy. So our target ROTA would be somewhere around 4%, but still we are having a ROTA of 3.35% right now, or 3.4% right now. So that is also very healthy. But yes, we have a good plans. We are planning to how we can touch that 4 number. And for that, of course, we have to work hard. We have to reduce our cost of borrowing. We have to reduce our operation costs, our salary costs, and all. We have to work on that. And of course, we are working on that. So that is very positive in a company. And being the size of a company and presence, I would like to say that Laxmi, we got getting the multiple numbers in a year or two, which will be very easy, because of our less presence in Bharat map. So we have a good opportunity to grow in other states also, as we have very well shown the our branch of profit now in other states also. So we are well, we say that we are strong enough now from inside also. Yes, we can perform outside our main territory. So that is also very positive. And of course, the last is the tech. So tech and AI, what we are using in the company, is on a very next level. So where, of course, this will help us in reducing cost, and especially not reducing cost or removing employees, but yes, reducing cost and making the work more efficient. So that is our target, what we are running behind. So this is, I believe, is a very all positive part, and that's it, I believe. So if any questions you have, you can ask me. Or
I think majority of the questions are done. So you were also mentioning about the cost of borrowing. So one popped in the last minute, so it has come to 10.6%. What's the scope to further it down? So let's say the ratings improve, you onboard some new banks, some new sources of borrowings, diversification. So what's the scope out there in terms of 10.66 to where do you see this number ending?
So basically, Rajat, day and night we are working very hard, keeping the global scenarios in place. I believe that everything is intact and the RBI is not further increasing any rates. So further, we see around 20 to 25 basis will be further reduction in this year that we are seeing.
Yeah.
Very new banks have also been added at a very low cost, like ICICI Bank. So one of the biggest private bank now has been onboarded. So with a very good cost, so it's almost 10%. 10% is the rate. So and that's to City Union, right? City Union Bank also has been added. Plus more new banks are under pipeline for. So once we start getting these sanctions at 10 or sub 10, overall cost will come down. Yeah.
Okay, sir. Thank you so much for your time. And we are already running on time because we have our next session starting as well. So thank you so much for your time, and probably we'll meet. Yeah.
Thank you. Thank you, audience, for listening. Thank you.
So I would suggest everyone, if you can just stay connected, we'll just have the management. आप जा सकते हो, sir. You are free. Yeah. So everyone will have the management of Finbert joining in a couple of minutes. But before that, I'll hand it over to my colleague Rashi. We'll give you a brief about Go India stocks. So something that we have developed in-house. So that's something wherein we provide institutional kind of research to everyone. and something in terms of how we have leveraged AI to do proper research and everything. So it will be a short video, we'll just run it through. So over to you, Rashi. Nicest would be coming from 4 to 5, yeah. Yogesh ji. Rashi, over to you.
Thank you so much, Rajat. So we'll be just showing the video. Great. Good afternoon, everyone. It is my pleasure to welcome you all again to the GII BFSI and FinTech Virtual Analyst Meet. Next on the panel, we have Finbud Financial Services. It's a full-stack retail credit platform uniquely positioned across the entire credit ecosystem with distribution, data, digital origination, and lending, with each layer strengthening the next. Finbud has built a differentiated and scalable business model designed to create long-term value for its stakeholders. With the launch of its lending business,